The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. We're going to have Norm Winsky on at the half hour. I was trying to remember his name. I've only known him 38 years. Anyway, he made one of the most startling predictions to me on Monday, and we've been planning on having him on anyway. So it's going to be quite interesting to hear how he went through this on Monday after this huge rally that we had with the Dow up 240, the S&P up 40, NASDAQ was up about 80, I believe. And he told me about 1 o'clock in the morning, New York time, he said, this market's going back down and make new lows in the next day. And I said, Norman, I don't know where you make this stuff up at, but I said, you've really got cojones to make that call. So those of you that listen to what he says should be pleasantly surprised, because that's exactly what happened. So he's going to be on today and give us a little chat about what we see going on. Now, we've got a couple of really big patterns that we've been watching for quite some time that are transpiring right now. The first one that I placed into the Tiger TV today is the euro. This is a 4-hour chart going back over the last several months, and we are looking at a major ABCD pattern completing. The number on this pattern came in at a 111.78. So far, that has been the high that we've had. Whether that number is going to, mean anything or not, we'll have to wait and see. But that was the number that completed the ABCD pattern just about perfectly. And if you looked at the low from the 21st of July into the 28th, that's very similar to the ABCD pattern that we had from the 5th to the 13th or 12th that we have going on right now. We had those 7-day rallies. So you had a ABCD pattern in time, you had an ABCD pattern in price, and it stopped exactly at the 786 retracement from the high that we made way back in July, on July 28th, which was at 112.40. So this is an important number. If we go above 111.80 today, folks, that would be a sign that we're probably going to go a great deal higher. That would be my guess. So that's one of the big things that is on the watch list. We have another one here that I think is also equally important for all of us, that we've been following it for quite a bit, and that's in the notes and the bonds. And last night, with all the craziness about the currency war. Now, they're talking about a currency war, and yet you've got that euro acting absolutely perfect. So I don't think there's going to be a currency war, and I don't even know what a currency war is anymore. I don't think we've seen one since '87. Well, that might mean something. I don't know. But anyway, if you can see here in the Treasury notes last night, we made a perfect ABCD again at the 61% retracement, going back from the high in January. So that completes the ABCD pattern. That means that we should start to move lower in the market. We've been watching this level in bonds that also was hit. Bonds had a little bit of impetus last night because when the notes were stuck at that 61% retracement, bonds went up another 20 pips from where they were. But the bonds are, very emotional, and it's a more volatile market than the notes, because the notes is such a huge market that it really takes a lot to get a fire burned under the note market. So that's what we're looking at now. The other thing that's interesting about this move that we're having here in notes and bonds, because I don't know much about the fundamentals, folks. I even though I've got a degree in that stuff, I don't really follow it that much. But I wanted to share with you, the symmetry that is really here in this trade here that we're looking at. Because if you take a look at this, you'll be able to see the move during March to April it's exactly equal to the move that we've had here between June and August. It's the exact number of pips. We went from 126 up to 130, and this time we went from 124 up to 128. Both of them were 4-point moves, and the first one stopped at the 786. The second one stopped at the 618, which means you're still in a downtrend. And so this is the moment of truth here that we're looking at here in bonds and notes, and they're acting like bonds have already dropped 1.5 from their highs earlier this morning. So we want to keep an eye on that to what's really going on with that. Now we had a pretty nice move so far today in the gold market. It's had a big move up into the 120 area, which we thought would be the first area of resistance, somewhere between 120 and 130. But I wanted to share with you one thing that was very important that we talked about yesterday, and it did it absolutely perfectly, and that is I'm going to mark it so we can see it a little bit better. You'll be able to see this. I'm going to put a little red box here so that you'll be able to see the 20-man line that we talked about yesterday while we were on the air, because this gold came right down and stopped to the exact penny of where that 20-man line came in at. It hit it twice. It hit it once at 111.03, and then it came down again to the 786 at almost 111 even. It came to 111.01. And so it had a pretty good move, and now we had a move up into new high ground. We've also moved into new high ground in silver. So even though if we get a sell-off here, we're going to be looking at a market that certainly wants to probably work higher, because we've had a nice move. This is just the beginning of it. It's only we've only come up of $55 in the last couple of weeks, and we thought that this short covering move was going to take us to at least $150 higher than where we were at 1065. That's going to take us up to around 1200. So we want to be looking at a really nice ABCD pattern here. If we do get a correction in the gold, then that's what we'd want to be watching to see, where we stand with it, because it's certainly acting like it wants to turn. Even copper last night, the copper went down and made a lower low by a penny. We went down to 229 in copper. The old low had been 230, and it also has rallied, better than 5 cents a pound. And so whether that's indicative of a turn here, we'll have to wait and see. But we've got a lot of things, going on here in the market that make you wonder whether you're going to see, a particular move. Now, the high that we made today in the gold was a 1.618 expansion of that last move. So this could be an interesting big pattern happening of what's going on. Now, we have a major report today in the grain markets, and we got some potentials on some of these things. But frankly, with all the things that are happening with the euro, the bonds, the stocks, and the gold and silver, it's really hard to focus on the grains, and that's not where my focus is right now. And that's just basically, what I'm looking at. So anyway, this is what we're keeping an eye on early this morning. And so those are the two that look really interesting, the bonds and the notes. And then also the gold is in an area where it's probably going to run into some profit taking. We'll cover stocks in just a little bit, but I did want to go into the bond market a little bit to show you how wild it was last night. And let me put up the 240, the 4-hour chart, because that shows it, much better than what we would ordinarily see, because we made another 3 drive to a top pattern in the bonds when we were having the situation in the notes where we were making the exact 61% retracement on this. We were already almost a full handle above the 1.618 in the bonds, making that 3 drive to a top pattern, a perfect ABCD over the last 5 days. And that measured into 160.22. The high on the overnight was 160.25. 20, so that pretty much completed that. And now we've had we've dropped over 1.5 handles just recently, and we're still up on the day. So, it's a real interesting situation. But that note market is the biggest market in the world, and it made a perfect pattern. You cannot make it any more perfect than that if you drew it in history. That's the bottom line of what we're watching here. So we have to keep in mind that these markets can reverse at any time. And this is all based on technical patterns, has nothing to do with the fundamentals, because I don't understand the fundamentals, and don't want to. Basically, I try to trade what I see and not what I think, because when I think, I get into the biggest problems. In fact, I had an interesting chat this morning with one of my friends from London, and he was extremely bearish something, and it was continuing to go straight up. That was silver. And I finally told him, I said, "You're thinking too much." I said, "Just look and react to what you see." I said, you're gonna put cobwebs in your head by thinking of all the different things that can happen, whether it's China or Goldman Sachs or the J.P. Morgan, whatever it happens to be. If you put these theories into your mind, it just gets you confused, in my opinion, because when you're a chartist, you only have one thing to go on, and that's that little bar chart, that little candle. Because if that candle's going up, there's more buyers. If the candle's going down, there's more sellers. That's the bottom line. It doesn't get any easier than that. So focus on that, and not so much on the fundamentals that you hear. If you use fundamentals in your trading, I think that's okay, but focus on what you really can control. You can't control the fundamentals and the information that people give to you. That's why being a chartist is fun, because if you're a fundamentalist, you got to remember that the people can lie to you, they can cheat you, they give you misinformation, they change the rules, but the one thing they can't do is hide. So if the prices are going up, there's more buyers. If prices are going down, there are more sellers. That's the bottom line of what we're looking at here as technical analysis. And as with usual caveat, this is only what we call probabilities at all times. So remember that. Now, we're having a lot of selling across the world today. The German DAX market, if you remember, we talked about that yesterday, and I wanted to bring it to your attention because one of the reasons why the markets were so weak today was, I'll show you, if we'll put this, give me 1 second here, we'll get this up and take a look at it, and you'll see why we had such a big problem. I'm going to mark this. This is the German DAX, and I want to mark the little red box here, because that's where the opening was today, and I want you to see why the markets and German. This is a huge thing traded in Europe, folks. It's one of the largest things. But if we take a look at this, you're going to see that the market gapped down 100, almost a little over 100 points from the 61% retracement that it stopped at yesterday, and that's what triggered our markets.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. service. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I was just helped out by my good friend Steve Rhodes about why this market broke. I assumed that it was what was happening in Germany, but there was a second RMB devaluation from China. Boy, that's twice in a week. Boy, they must be in big trouble, because that is really a bad sign. That's probably why these markets are as weak as they are. And given the fact that the breadth of the market is so bad, boy, we could really be in for a major correction. We might even have a 10% correction in stocks. We haven't had one of those since 2011. So we'll watch to see, what's going on, with this, but it's going to be very, very interesting. Keep an eye on where the money is, folks. The euro is the largest traded thing in the world, and if it gets really strong, we get above that 112 level in the euro, we're probably going to, see something, pretty dramatic. That thing could move 4 or 5 points very, very quickly just on a panic move. And also the bonds, just because the bonds and the notes stopped where they should have, they can easily reverse and go back up again. So watch where the money is flowing, because that'll be the key. During 1987, when the market broke really bad, I was in this trade because I was long bonds. I had a Gartley buy signal in bonds, and I'd been short stocks since October the 2nd. And we were in a situation where the Dow was down 300 points in the first hour or two, and the Treasury bond market was down a half a point. And that was really nothing compared to what was the debacle that was going everywhere. Gold was up about $40. And I got scared out of my bond position because I thought everything was just going to collapse. And the bonds just held their own and held their own. And at the end of the day, with the market down, 500 and some points in the Dow, the bonds were only down about 8 points. And the next day, when they changed the accounting for the bank so that they could market to the market as opposed to cost, the market just turned, and the bonds went up 11 handles without ever letting you in. I mean, it wouldn't back off more than 15 pips during the whole thing. It just ran and ran and ran and ran, and it's been running ever since that time, because it was in a major bull market that bottomed in '82. So it's going to be interesting, how we see some of these things unfold. Now, I put the chart of the DAX in, and I updated it to show you where I think where the ABCD pattern goes. As you notice, that we gap down below the 61% retracement, that would tell us that we're going to exceed the ABCD leg. And so if you extend that by 1.27, that will take you down to where you're looking at in the DAX, which will be down near the 786 off of the low we made, about 7 or 8 weeks ago. So that's what we're watching here at the time, and so we'll be able to see how this is going to unfold. Now, we have a grain report today. I recommend not doing anything into a grain report. That's like trading into a non-farm payroll number. You don't really need it. But tomorrow we're going to we will have Rich Anderson on. He's promised to try to come on, and we'll discuss the grain report, and we'll look to see where we are, because we've had some good volatility in the grains like we've had in some of the other things. But compared to the other things that are really out there moving around, the amount of volatility in the grains is very, very minuscule compared to what's going on in currencies and bonds and in the stock indices. So that's, you want to try to see what's happening. Now, we've got Norm Winsky coming on at the break here. And as I mentioned, he made one of the most amazing calls I've seen in the last several years, and that was Monday at 1 o'clock in the morning, New York time, with the NASDAQ still way up in the air and the S&P still way up in the air. He said that his work said we were going down to make new lows in the next 2 days, and I immediately emailed him, and I told him, I said, buddy, I said, I've known you a long time, and you got to have big cojones to make a call like that. And he said, I stand by my work. And I said, my hat's off to you. So we'll see what's happened to it. But pay attention to what he says, folks, because he's given us some really good turning points in some of these markets. And even though they're short term, they certainly can be very, very profitable. So you want to be able to focus on that when you watch to see how these trading things turned out. Hopefully he'll share with us what he's doing with this. I don't think he'll give us the formula, which we wouldn't expect, but he'll probably tell us, where it's coming from. But he's got a lot of things on other markets too that will be interesting, and he's going to have some nice charts for us, and it'll give you a break from listening to this old cowboy's ratchety old voice this morning. And Norm Winsky will be on here at the break. So we'll be right back with Norm Winsky and from Astro Trends in just a few moments.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have our friend Norm Winsky on the line. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning. I told the folks a couple of times today about the call you made with me on Monday, and that was really spectacular. It was one of the best ones I've seen in a long time because I didn't think it had a chance of a snowball in hell to do what it did, but it went down and made new lows just like you thought. Well, listen, we've got it set up that you can handle your own charts today, as I've been told. So I'm going to give you the microphone and just go to it, say whatever you like, and we'll have some questions. We'll interrupt you, but fire away what you'd like to share with us today.
Can you see my screen now?
Yeah, I can. Sure. Yes, because I've got the charts in my own Skype, but the folks in the Tiger Den are able to do it because they set it up through Skype, so we're okay.
Okay, great. Hopefully it'll be new and improved, So
I don't know how you can improve better than what you did Monday.
What's that?
I don't know how you can improve from what you did Monday. That was me one of the wildest calls I've ever seen. My hat's off to you on that one,
I'll
buddy.
tell a little bit of the factors I used for that. I had my Astro calendar, and it had a big number there for Monday night for a change in trend. And then confirming that was also I'm an old. I used to be a CBOE market maker. I was on the floor there, and so in my early days there, I developed a sentiment indicator based on the option numbers. And it's not the put call ratio, but like a cousin to that. Yeah, I think I have a better version of that, and I think there's a flaw in the one that most people use, and that was don't get many signals in that. I've been getting quite a few more signals in that lately, up until about maybe May or so. I would over the past few years I was getting like 2 a year. I think I've gotten like 6 or 7 now in the past several months. So it's that thing works about 90% of the time. You can get those numbers as early as 4 or 5 o'clock in the afternoon after the market closes, and so I really had that information, for several hours before I sent it to you.
Okay,
so moving ahead here now, we have just a quick review of last month because I think this has major ramifications on where we're at now. We had when I was last on your show about a month ago. I talked about the big window, two big change in trend windows coming up at the end of July. One of my top things is when the planets do the relative motion of the Earth go direct or retrograde. Those are called station points. If you were to go out and plot the planets in the night sky, you would see that the planets appear. That's the key word, appear, to stop their motion and then reverse the direction. This is probably one of my best forecasting. Using the planets, one of the best forecasting methods there are. And you can go look this stuff up, and it's no great secret. And if you do that, you'll find out this is a tremendous forecasting tool. So every planet has an association with a sign, and the planet and the sign often are connected with various markets. I emphasized these markets here. Hopefully people can see that on the screen there. We had stocks, cattle, cotton, copper, cotton, sugar, wheat, corn, gold, cocoa, hogs, and T-bonds for those two big windows, which was the weekend of the 24th and then the weekend of the 31st. We had two station points occurring there. The 24th weekend was even more, it's hard to say one was more powerful than the other, but I have to kind of tip slightly to the weekend of the 24th because we had two planets turning retrograde. So that's a station point over that weekend. That's very rare to have two of those. And so we were looking for a change in trend point at that point. And when we got to Friday, I sent out an alert like Larry was talking about on Monday night to my subscribers that we had not only I'd been alerting, they were alerted this week's in advance. And I said, okay, the market had been down sharply into Friday's close, the 24th. I said, we have my sentiment indicator flashing a buy. I think we'll make a low on Monday. And that's exactly what happened shortly after the opening on Monday. The stocks made their low. And then we started going up, and then we went up into and then when we got to Thursday night, I said, okay, we got a early morning full moon on Friday morning. I think you should exit your longs and, let's see where we're at. We might be going short soon on the next big change in trend window, which is the weekend of the 31st. Now, an interesting thing happened. Larry was talking about gold here a little while ago. Interesting thing happened on that full moon on early Friday morning. If you go check your chart, you'll see that the gold made its low, I think, within an hour of the full moon. So my tip to your folks out there, Larry, is this is simple stuff. Many calendars have full moon, new moon on the calendar there. So it's not going to cost you anything to start watching these moons and see if there isn't changing trends on some of these markets. I think the gold, I had this whole window here from Friday to Monday, July 31 to August 30th is big for the gold, the corn, and so forth. And the corn, I think, made its low on Monday, August the 3rd. And that was a huge window there for those markets. Moving ahead, let's see, I'm going to move ahead now. Here's the stock market. You can see on this chart here that the stock market made its low right there on Monday, and then we went up and made that a high on Thursday. Thursday night, Friday morning, the 31st of July. Moving ahead, now all these charts are as of last night. Obviously, some things have changed overnight. This is pretty interesting. We had some chart lines on this S&P chart here, and we had a triangle triangle wedge formation here, and we obviously have broken that now to the downside. Classic technical technique is you take the widest portion of this, which would be 2040 to about. Let's see, you got a 20. You got about 70, 80, $90 there, I think, on that S&P chart, and you flip that over from this point on. So there's a potential here for this thing to drop all the way down $90 below 2040 would take you down to 1950 on the S&P. Does that line up with anything you're looking at, Larry?
Yeah, that's that big expansion, of course, and of course what I've been noticing. I don't know what your opinion is on this, but the overall breadth of the market has been horrible for the last several months. I mean, there's more new lows to new highs.
This market the last 6 months reminds me a lot of, if you remember 2007, the market during the summer of 07, the spring and summer, the market would keep going up, making marginally higher highs, and then plop back down. And the internal numbers were horrendous, really bad. The new highs, new lows just kept getting deteriorating. And what we've had here the last 3 to 6 months, it reminds me a lot of the price action we had back in 2007. And then we had the big lineup there you and I talked about before about the May 1920th high, how that lined up. That's like a cousin to October the 11th, 2007, because of the planetary pattern. And also the Fibonacci link up too. And I'm gonna, if I can come back on your show next month, I have something happening in September that is projecting a date out in the end of September.
Well, that's we have a Bradley date. I follow the Bradley model, very, very closely. And I believe there's a Bradley date out there, but that's, you don't know whether it's going to be a high or low at that time. So I think we're definitely going to have you on next month. So just mark your calendar. Okay. You're going to be a regular guest. I'm going to put your feet to the fire since you've done pretty good on these last ones.
Okay. All right, let's zoom through some charts here.
Sure,
here's the cattle chart here. You can see how it made a low here, and you can see the chart pattern. This kind of looks to me like a distribution pattern. This market is like one of the most stubborn, excuse the bad pun here, bullheaded markets in terms of, it should be, its stuff is like, this is probably the most overvalued market there is on the commodity board. Cattle is up here at crazy prices, and it's been there for months and months, and it's way overdue to see a major correction or bear market. Anyway, this looks kind of like distribution type pattern to me, and it looks like it broke its uptrend here going all the way back to March. Cocoa is looking interesting. Just had a nice up move here from March also. Got to the top of the channel here, and it looks like it's rolled over, maybe broke the bottom of the channel. So it looks like cocoa may be in progress to pull back some more. Coffee looks like it might want to be poking out on the upside here, and it's breaking. It had a nice long multi-month that goes all the way back to March also. We had this downward channel, and now it looks like it's maybe poking up over the top of the channel there, on the verge of breaking out to the upside. Copper, as the troubles in China and different places, no wonder, and I was looking for the Bradley talks about in his book, about one of those big things is the Jupiter, Uranus, different angles with Jupiter and Uranus, how that corresponds to the 41-month business cycle. And so anybody veterans know that everybody says copper has a PhD in economics, and this is a market that is very much tied to that 41-month business cycle. And so I was looking for Jupiter, Uranus in this period here. And going into, late June was like the last trine, last 120-degree angle. So that said that this market was headed lower. And
Norm, we have a question from one of our dinners, and that is about the Chinese have devalued their renminbi twice this week. Is there anything astrological that would have tipped off anything like this? Or I might be way off base here to even ask if you follow that, but do you have any information on that?
Well, because it's not been really a free market, I haven't bothered to try to forecast it.
Yeah, me too. I'm the same way.
Hasn't it been pretty much a kind of a controlled market by the Chinese?
Oh yeah, they do whatever they want, pretty much
so
like
it's not
what they
like
do
you
here.
Go trade. I don't think you can trade. I don't think they have liquid. What do they call wand futures or whatever it is. So it's
Yeah,
not something that.
there's some forex firms that use it, but it's really not too big. So anyway,
Yeah.
well,
All right.
so go fire away.
Sorry, I couldn't be more help other than all my indicators lined up for a big change in trend there. Notice how the copper had a little bit of a short-term low there at my Venus-Uranus point there, station point for weekend of July 24th. Here's the corn. I kind of like the corn. Jupiter has left Leo. Jupiter is in abundance. Leo is associated with corn. And so I think that some of that, I think relative to the other grains, I think the corn is going to start being the strong sister of the 4 grains for the coming year. Well,
So
what do
you
you
think
think about that, Larry?
corn is going to strengthen over wheat and beans?
Yeah, I think that this is going to be do better. I think soybeans are going to start doing be the weaker sister. That's because Jupiter's going into Virgo, bringing more supply to soybeans.
Okay, interesting.
Yeah. So moving ahead here, here's cotton. It's in a nice downtrend here. There's your gold. I agree with you, Larry. Same idea. Gold is a Leo thing. Jupiter left Leo. And so now we should see some supply leave the gold market and help boost the gold. We also had some afterburners kick in here last weekend when geocentric Mars entered Leo, energizing the gold market. And you can see that kind of about there. And so we're kind of moving up. I agree with that. The gold should start doing better. Here, the hog market is not looking. Looks like hogs want to head for a new trough. So this chart pattern does not look very healthy for hogs. T-bonds. There, you were talking about bonds.
Yes.
You may remember a month or two ago, I showed my fractal model there. That's been tracking unbelievably well. That said that we'd be consolidating and moving higher here into this time period, and that generally T-bonds should be moving up in September, and that would probably be that's also probably a mirror image for the stock market, and so I expect the stock market to be trending lower into September, about mid-September.
I understand.
And then the bonds should have some kind of peak there,
Norman, we're going to have a break here in a minute, because tell the folks how they could reach you and get a sample copy of your letter. And folks, listen, I don't beat people's drums very often on this show. I have them as guests, but this is something that you really ought to pay attention to, that anybody to make a call like Norman made Monday, if he can only do one of those every 3 or 4 times, it'll pay for that letter many times over. So pay attention to how to get in touch with Norman, because I think it's well worth your while. So go ahead, Norman. How do we reach you? We're going to put this into Tiger TV also, but why don't we get our listeners? It's quite easy to get in touch with you.
Put all my contact info on the screen here now, and I'm in Florida, so you can call me on my landline at 239-594-3939. That's 239-594-3939. Or if you're overseas, you can Skype me at norm.winski. That's norm.winski. And I got a little window here where I could help some folks with a free letter and a free private class. And so if the first 5 people that contact me in the next 4 or 5 days to do that, I'll give them the free letter and the free class. And so looking forward to helping some folks.
Well, you certainly can, and you are a master astrologer. I mean, I know you've had a lot of access to Evangeline Adams' library, and you have a tremendous library yourself. As a matter of fact, you were one of the few people to have The Egg of Columbus by George Baer. Hey, Norman, thanks for joining us, buddy. We'll have you on in another few weeks, okay?
Oh, we're not coming back, okay.
No, we got the break coming up, so we'll catch you next week.
All right, thanks a lot. Bye.
Thank you, buddy. Bye-bye.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I've posted the thing about the death cross. I've had several people ask me about that. I just went to Wikipedia and Investopedia to describe. Basically, it's when you have two moving averages. The ones that they use the most are the 200 and the 50-day moving average. And as you can see in the Dow Jones Industrial Average, we crossed that back in early August. We've now crossed it in the New York Stock Exchange Index. We've now crossed it in the S&P 500. We have not crossed it yet in the NASDAQ, but that's one of the things that we want to keep an eye on. So it's just a way of looking at the overall strength of the market. And we look at breadth here at TFNN, and the breadth of the market has been bad since May, and it's getting worse, and now we're starting to see some of it. I posted a chart for Apple into the room, and as you can see, we've had a pretty big gap down in Apple, and we broke down below that ABCD support that we had at the 113 level. We rallied all the way up to 119, just 6 points. That rally that we had yesterday, actually came in on Monday, was exactly a 382 of the all-time high at 133. That came in at 119 and change, right to the penny. And now we've broken down, and that sets up a new ABCD to the downside. So we've got a lot of these things are pointing lower in some of this stuff. So, that's what you want to do. And if I have any advice for you today, folks, is to watch the euro. We're right up here at this 111.75, 111.80 area. If we break above the 112 level, this thing can go wherever it wants to. This is an ABCD of major proportions. We backed off almost 30 pips right after the high was made, and now we're back up against the highs again. That's directly related to the fact that we got stock indices near their lows. And so that's one of the things that we want to, keep in mind. But follow the money. Watch the euro. The euro will follow, the bonds will follow the euro. Everybody follows the euro. So, it's where the money is moving. That's the real key. We haven't had any fear come in this market for a long time, and the VIX index is still way, way low. So, be nimble, be careful, and live every day in an attitude of gratitude, and may God bless.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.